Yesterday's server maintenance left many Binanceans out in the cold, and they were pretty upset because that was the exact moment that the crypto markets capitulated in one of the worst sell-offs that we've seen all year. News is beginning to circulate about a Chinese Ponzi scheme that many claim to be responsible for the sell-off. Meanwhile, XRP dumps another billion tokens on the market, and an ICO fights back against the SEC. Let's break it all down in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live for you in the studio. Today is August 15th. It is Thursday, 2019, foul year of our Lord. This is your daily source for market updates, sentiment, and news for cryptocurrency traders and investors. Of course, I'm Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, whether you're watching us from across YouTube, Twitch, DLive, Facebook, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in the live chat. And for you YouTubers out there, our most popular platform, the like goal is 100 today, guys. So let's get to smashing. Now, today's episode of Breaking Bitcoin is brought to you by us. If you are an aspiring trader or an experienced trader looking to sharpen your skills and you want to work with a team with a proven track record who deal in the realm of probability, statistics, and verifiable edge, head over to premium.crackingcryptocurrency.com to see what the premium trading group can do for you. Exclusive setups, and trade signals, the pathways to profit strategy building course, proprietary indicators, spreadsheets, and tools, as well as educational material and database library. Come join the fastest community of traders and investors at premium.crackingcryptocurrency.com. Start off real quick. We've got some premium trading group updates for the guys in the group. Obviously, you guys know I published a new PTP video yesterday that was on how to upgrade our current existing strategy testers that I'm teaching everyone how to build. From V3 to V4. Today, I just published a new video this morning. I worked on it yesterday. I just finished the editing this morning, so I published it. And that is going to be our backtesting optimization 2. So we had previously done optimizing our backtest, so how to take our initial backtesting strategies and then filter those down and get even cleaner results. This is a little different. This is actual programmatic tips and tricks to working in Pine. How to quickly test a lot of parameter sets for your indicators, how to quickly test between different profitable strategies. I've got another video that's going to be coming up after this that's going to be talking about writing multiple conditions in one strategy when we're optimizing our strategies. That's really going to help out. It's really going to help out and really save time, because operating in Pine Strategy Tester already saves so much time. And I've been doing it for so long that I just want to convey to you guys all the tips and tricks that I've learned by doing this. Now, EOS competition is live. We're doing pretty good. We're currently 16th place out of 76 competitors, competing teams. So doing pretty good. Not in the top 10 yet, but we've got plenty of time to get up there. Let's see here. Let's see. Well, let's just go ahead and start off today's show like we always do by giving away some cryptocurrency. I want to thank yesterday's crypto comment giveaway winner, Mr. Ether, the man, the myth, the legend. And of course, I want to thank this month's crypto comment giveaway sponsor, X42 Protocol. Make sure to go check them out at x42.tech. All right, and here we are in the live scene. I am pulling up yesterday's video so I can paste that into our random comment picker. As long as YouTube behaves here. Let's go, YouTube. I'm trying. How are you guys doing this morning? It's great to see you guys in here. I see all the good guys in the chat. I see all the regulars. Thank you so much, Mario. Actually, you can thank Scott. Scott was the one that designed this computer. He built it from the ground up. I just smudged the glass. He's probably going to charge me 50 bucks for that. But he does great work. He's actually built a couple for our members and friends of the community as well. Let's see here. Go to this button right here. Okay, here we go. Yesterday's video was the cryptocurrency markets real from the British banks and the SEC actions. What to do to protect yourself. It was a great video. Make sure to go check that out. Also, I guess following on the heels of that, if you guys are interested in a computer built by Scott, you can check out his work, revivaltechrepair.com. He does fantastic stuff over there. And we're going to randomly pick a winner. Hey, by the way, guys, 31 commenters on yesterday's video. All I had to do was say one thing. We had 2 comments the day before. I was like, come on, guys, let's bump that up a little bit. So thank you guys so much. 31 comments. Absolutely fantastic. Keep that hype train going, guys. It may not mean a lot to you. Just let me know what you thought of the video. It takes 5 seconds at the end of the show. Really does help us out with the YouTube algorithm. Deconstructing it is a cruel and bitter mistress. And let me tell you, it's a lot funner probably sitting on that side of the camera than on this side. But of course, we have Ken D raking in the win. Congratulations, my friend. If you get a hold of me in the Discord at JustinWise, hashtag 5696, I will tip you some crypto. Thank you so much for participating. And if you guys would like to win some crypto, as we do give away crypto every single day on this channel, just leave a comment at the end of the video. Helps us out with the YouTube algo gods. Helps you out, put some money in your pocket. All right, so let's slide the microphone on over here and assume the position, guys. We're breaking down the technical analysis today. Okay. Wayne Arndt, thank you so much. Mr. Ether LMAO. Yes, that is you, Ken D. Congratulations, man. Paul Sharp, do I have a mining rig? I don't personally. Scott has several. So I just have the lovely RTX. I do stake some coins, but I don't mine. Got the iced coffee going on today. Candy, thank you so much, man. Highly appreciate it. Bitcoin millionaire, good to see you. Charmaine, good to see you as well. Justin, check the charts. Bitcoin dumped for gold. That's indicators and strategies. Let's go to the compare. Let's check out Zao. It's going to be easier if I do this because of the price differential. Let's go to, let's do this. Let's split it up. And yoink. Yeah, that's better. No, that's still off quite a bit. There we go. That's about perfect. Let's see here. Seems like they rallied up. We're still a day off. 6th and the 5th over there. Don't worry, guys. I'll get it. There we go. No. Oh, it's not going to line up because of the weekend. Hey, it's one of those days, guys. Now I just got to set up a way to get crypto. It's super easy. You just go to x42.tech and you download their wallet. Anyways, let's go look at the price action for the last couple days. 12th of August, 13th of August, 14th of August. You know, I'm not going to really say that it really rallied dramatically. I mean, we have some significant movements. And again, you know, the gold markets are harder to move. They're significantly harder to move than the cryptocurrency markets due to the amount of volume. So low volume markets are easier to move. The less volume in a market, the more volatile the market is, just by fact that you have less willing buyers or sellers on either side of the book, right? You have a inefficiency of buyers and sellers in the market, meaning the order books are going to be thinner. So if you go to market buy an order, you're likely not going to get filled at your limit price that you wanted to get filled at, or at currently traded last price. You're likely going to scale the books up. So anybody who's done some significant amount of trading on Binance or any cryptocurrency exchange is well aware of this, or penny stock traders example is a good example. So penny stock trading, you know, I find that a lot of the people who do okay coming out of the gate in crypto, they often don't hold up because of, but it requires a certain skill set to trade cryptocurrency. If there is a market that I would compare it to, it would be penny stocks because of the low volume and low volatility. But sunglasses. I do not see a direct correlation here. I don't see a direct correlation. I think that gold is in an uptrend. I think that it is in a natural progression. I think that Bitcoin is in a higher time frame, bullish trend. So a weekly bullish trend, a monthly bullish trend. I don't think that it's currently in a daily bullish trend. We're going to see. So this area, let's get gold off here for a second. We'll kind of come back to gold, but I do want to talk about Bitcoin and kind of talk about what's going on with Bitcoin right now. And really what I want to talk about is, hey, what's going on, Misevsky over there on DLive. What's going on? So one thing that I do really want to talk about today is the price action gurus talking about this level of price. And again, I saw a lot of comments during yesterday's live stream. You absolutely can, Misevsky, and I will try to get to them as soon as I can. You know, I saw the comments coming in yesterday, talking about and asking about, you know, this is going to be the, this is, you know, we've dumped to the $10,000 region. This will be the third or fourth time that we've dumped to the $10,000 region. And then we rally up from there. I don't, you know, and again, you guys know that I don't predict price. There's no prediction in what I do. You know, I have I follow the dominant trend and I enter in that direction. And I've constructed a statistical set of indicators that allow me to make more money than I lose. And that allows me to be a consistently profitable trader. There's no guesswork. There's no subjectivity. It is all if this, then that. Because in my experience, and I've been doing this for a long time, that has given me the best success and it's allowed me to live the most fulfilling life as a trader. But we will talk about price areas. We will talk about price dynamics. We will talk about patterns, not chart patterns, but patterns as we see them play out across the market and across tradable assets. So as I talk about in our premium webinar series, and as I've talked about many times on this show, a common pattern that we see is levels of support and resistance. What are levels of support and resistance? Levels of support and resistance are psychological areas where buyers are willing to buy. That's a level of support. And a level of resistance is a level at which point buyers are no longer willing to buy and sellers gain the momentum, right? It's just a support and resistance is a dynamically shifting relationship in the conversation between buyers and sellers. So when you reach a level of resistance, it means that buyers are willing to buy the asset up to this price, but no further. And because sellers and buyers are always in the market, that is the point at which the pendulum swings, equilibrium takes a hold, and sellers gain control of the marketplace. Conversely, with support, that is an area where sellers are trying to push price down and buyers are not really yet willing to buy, but below a certain price, at a certain price, buyers say, really, no, not further. This is a really cheap price. We all feel that this is a very cheap price and we're going to buy. That is the dynamic of support and resistance. That is the dynamic of support and resistance really played out on the charts. It's not the technical analysis, chicken bone reading, you know, facet of things that it really is. It's a very simple dynamic of equilibrium. So anyways, but one thing that we do notice is that support and resistance, especially in cryptocurrency, does not last very long. Often by the time that you have realized, and this is one of the dangers of reversal trading works well with good reversal indicators in ranging markets. It does. I'm not going to deny that good reversal indicators that can be tested statistically do give good results in a ranging market. And this is a ranging market, although there are also micro trends, I would say also almost meso trends within this overall period of ranging, really that we've had since the 25th of June when we reached the high here. Now, of course, there's big moves, right? There's obviously big moves here. But if we can compare this level of price action that we've had really over the last 2 months with the level of price action that we had kicking off, breaking out of the ranging market from April, beginning on April 1st with this big up candle right here. This is a strongly trending market, very little consolidation, very little sideways movement, just steadily trending to the upside, and the directional trade is to the upside. As opposed to over here, and we can see that that lasts from April until June. So that's almost a 3-month bullish cycle. Whereas as we've seen over the last 2 months, we've not seen that. We've seen good trends that last about a week in one direction or the other. And then I see two of those. I really see two of those, maybe three. And the rest of the time, it's overall chop, it's overall consolidation. We've got a fairly well-defined range between the $13,000 area and between the $9,000 area, right? So obviously, this play has worked out 3 times. Buying in the $3,000 area and selling around the $12,000 area, right? And the problem with that is that once that becomes visibly apparent, once a scenario or a dynamic like that becomes visibly apparent, often what you will notice is that when people then go to trade off that, which is previously known, now considered common sense data, that is the moment at which the market does not respect your trend lines, your levels of support and resistance, and moves in the direction that it's going to move. Every moment in the market is unique. And it is when patterns become clearly visible that the cryptocurrency markets become very much like the Forex markets, and that the Forex markets are manipulated by the big banks, whereas the cryptocurrency markets are generally manipulated by larger traders. So, so all that to say, I don't really buy into this. Prices at 9K, prices at 10K, that makes it an attractive buy. I do not trade that way because of the dynamic that I just established to you. Something that works a few times, but then does not, is not good enough to make it into my permanent trading strategy. I need to know that my strategy works 60% of the time, 70% of the time. That's fine. As far as percent profitability, you can have a poor win-loss ratio in trading trend following strategies. You absolutely can. Again, if I go back to my history of trading CME E-mini futures, when I traded E-mini futures, I would win on average 4 to 5 times out of 10, right? And more often than not, 4 out of 10 times. That was my statistical average. But I still was profitable because I would let my winners run and I would cut my losses. These are the basic tenets and rules of a trend following trader, as opposed to a range trader, a reversal trader, whatever you would like to call them. So when it comes to the current area of price in Bitcoin, I do not buy into I don't buy into the argument that price is at 9,000, therefore it is an attractive buy. I think that price is an attractive buy when it is trending to the upside, and my indicators indicate that it is an attractive buy. There needs to be volume, there needs to be momentum. All of that needs to occur to the upside. Areas in the market where, like this candle right here, for example, and you'll kind of see this more clearly when we go down to the lower time frames as well. Candles like this are notorious for blasting traders in the face. So if you are not in an active position, I would still be in the same dynamic as I was yesterday. If you did not capitalize on this trade to the short side, and again, you need to watch this channel, you need to listen to the trades that I make, you need to do your own research, you need to develop your own strategy, you need to develop your own system that tells you when to make a move in the market. If you guys would like some help with that, you guys can check out the Pathways to Profit course. That's literally what I teach people to do in that course. But we talked about taking the short trade right over here. We talked about taking the short trade on the close, live on the air, on August 12th, 2019, during the daily show. You can see here, Minx is below the zero line. Wadatar Explosion was confirming the long, as well as Fisher Transform confirming the long as well. Of course, that's not the purpose of Fisher Transform. We've talked about the purpose of Fisher Transform as an exit indicator. But again, as we can see, everything lined up to allow us to take our trade. And then we talked about those downside targets. We've now hit on that low wick off of today's daily candle. We have now hit take profit 2 on our daily setup. Our 12-hour setup to the short side is completely cashed out. So great profits, guys. It's been a couple of great days in the group. It's just one of those days being in the members lounge, or, at least for me, talking to the guys who DM me in the group. It's kind of like the champagne bottles popping, people running around acting like idiots. It's totally fine, right? It's good to be excited. It's good to be happy about a win, but it's right at that moment when you do want to make sure that you don't double down on that risk. For example, I talked to a member the other day, a member in good standing, a guy who's gone through a lot of the work, but it's his first year of trading and he's newer to trading and mistakes do happen. And last week we were taking Bitcoin to the upside, and this individual was up, several $1,000s on a long trade, and then took profit too early. And because of that, then attempted to completely bypass the strategy take a trade to the downside, took a significant loss on that, doubled down again in the opposite direction, trying to take price back up to the upside, and, you know, eventually ended up with a pretty significant capital loss. And it's absolutely fine. You know, those are absolutely mistakes that we can come back from, right? Those are absolutely mistakes that we are coming back from. You know, as long as we are alive and breathing, and as long as we learn from our mistakes, there's no loss that is actually a loss. Those are all opportunities to learn, especially when we're newer to trading. Those things are going to absolutely happen. But, you know, that just, it's kind of the point. I forget why I made this original point, but I just wanted to point out, you know, the importance of, you know, having that community. And when you are on the tails of having a very profitable trade, to be a little bit more relaxed, right? You know, you don't just, it's not like the hunters go out and they get the wolf, right? After hunting the wolf for like days and days and days and tracking it, and they kill the wolf. Well, then they come home and they like feast and party, you know, and hang out with the tribe for a while. They're not like, all right, yeah, on to the next wolf. They're like, oh, we did it. Okay, let's relax for a little bit. You know, often it's a good practice to, after you have a very successful trade, to just reset. And we have the option to do that in a very safe manner by our access to leverage and our access to margin trading with platforms like ByBit. Because as soon as we're done with the profitable trade, we just short sell our USD value. We're hedged. We've got our USD value locked in. We don't have to worry about selling to Tether and worrying about Tether. We don't have to worry about moving funds off the exchange and selling into cash, putting them on Coinbase, and then moving them back. And again, we don't have to worry about having our funds in cold storage, which is safe, absolutely safe. But at the same time, when we're worried about dollar valuation of our funds, now we have to worry about, you know, Bitcoin's price going down. So it's really, I mean, the only good option for preserving USD valuation is to be in a hedge short position. And again, I talked about this yesterday. I have a video on this in the Trading Crypto 101 playlist. So if the concept of shorting to hedge your dollar value still is something that confuses you, you can go check that video out. Again, it's you know, when I explain it to people, it's not a difficult concept, but a lot of people think that it's like voodoo. It's not. It's very simple. When you go 1x short, and again, I don't like saying 1x short anymore because people actually confuse that with the amount of leverage selected. If you have $5,000 worth of Bitcoin and you go short $5,000 worth of Bitcoin, it doesn't matter if price goes up or goes down. You will have $5,000 worth of Bitcoin regardless of what happens in the market. If price goes up 10%, you didn't lose 10% of your dollars. You would have lost 10% of your Bitcoin, but you still have $5,000. You have $5,000 worth of Bitcoin, but because price went up, you now have less Bitcoin to equal that $5,000. And if price goes down, you still have $5,000 because Bitcoin's price is less valuable, so you need more of it. So now you have more Bitcoin, still worth $5,000. But now, if you exit your short and then price starts moving back up, you now make money on more Bitcoin because you have more Bitcoin now. So, MacW says, what about mental resistance with whole numbers in fives? So it's one of those things, man, you know, mental resistance, and, you know, Bennett has a pretty good video on this. But so does, you know, so do some other content creators as well. But again, you know, I like Bennett's work. He makes very good videos. The issue with mental resistance for me, though, is it's one of those things that works well when it works, but more often than not, it does not. And the problem also with mental resistance levels is that it's very subjective. So what is a mental resistance level, right? So you say 0 and 5, but there are people out there who talk about different deviations. And these are actually, it's pretty common. I'm not talking weird stuff. I'm talking pretty well-established, you know, people are talking about, you know, Fibonacci extensions of price levels, psychological levels. Is 11,200 a psychological level? Is 11,250? Or is it just 11,000? Is it just 10,000? Is it 10,900? Is it 10,999? You have all these different theories out there, and there's no good consensus on it because there's no good consensus to be had. So it's one of those things. It's like Fibonacci, man. These things are typically, you know, Fibonacci, in my experience, is the greatest I told you so indicator, right? Because when we do something like Fibonacci, and again, I don't mean to, you know, annoy anybody because I constantly like kind of, you know, talk bad about Fibonacci, and you know, but it's just so popular and so many people use it, and so many people just don't objectively have success. Sorry about that. Had to adjust. Sitting here for some reason, it's getting hot, man. Right, you know, like, so mental resistance like 6K. Even I was talking about mental resistance at 6K, and that didn't end up playing out. So So let's draw this. I want to draw this like Fibonacci retracement, right? And just for the purposes of examples, here we are on ByBit. So we're just going to draw a Fibonacci extension from the highs to the lows, right? And you know, these fib extensions, and again, you can argue about like how I drew the fib or whatever. Like that's not the point. The point is not like drawing an accurate fib. That's kind of like jumbo shrimp. But the point is just, you know, illustrating this purpose. So we've got this Fibonacci extension, and just like psychological levels, you're gonna see somebody post a chart with a bunch of lines on it. And you know, I know this is like a cliche, but it is true. It's true. And because it's true, that's why I talk about it. So for example, you're going to see people draw Fibonacci levels, and they're going to talk about the big ones. This is how I notice it. You know, because people always come back and they're like, well, Justin, you just don't use the Fibonacci right? You only use the 786, right? And then their buddy will hop in and say, yeah, and you only use the 786 if we've broken the 236 on the prior retracement and it's wave B of C. And then their buddy comes along and he says, right, what those two said, but you also only take the 236 if prices violated the upside down of the zigzag pattern and it is heliocentric moon time. I'm serious, and I know people are going to be like, people hear me say things like that, and they're like, Justin, you're crazy with it, you are exaggerating. But I'm telling you, as soon as you dip your toe into the level of the Fibonacci instrument, as soon as you dip your toe into the level of price action, you only have to take a couple steps before you move from, yeah, man, you draw Fibonacci, and the 618 is a common retracement, the 786 is a common retracement. You know, sometimes the 236 acts as a level of resistance, and they're just levels that you watch, right? That doesn't seem too bad, right? When I explain it like that, and it's not. But once you dip your toe, once you drink a little bit of that Kool-Aid, I swear to God, it always happens. A couple months later, I talk to those same traders, and they've got moon charts on their patterns. They've got the zigzag indicator. They're looking at pivot points. They've got all this other stuff, right? And the worst thing about that style of trading is, in the end, at the end of the day, and this is 95 out of 100 people that I meet and that I've talked with and and what I've experienced myself personally, they end up drawing all this stuff on their chart, right? They've got all these trend lines. They've got all these different indicators, right? They're marking out all these levels. They've got all these horizontals. And at the end of the day, when it comes time to make a trade, it takes them like a half hour to an hour to make a decision. And at the end of that half hour to an hour of him hawing and like looking at all their different data points, it's just a coin toss anyways. It's just a coin toss to them. They're just like, okay, maybe yes. Okay, 618, 786, support. Okay, we broke that trend line. This is probably wave B of C. Yeah, okay, yes. Yep, Fuck it, I'm gonna go long. I swear to God, like I know some people are gonna be like, man, you're caricaturing traders who are serious, and I'm not saying that there's not, and I'm not saying that people don't make money out there with Fibonacci, but especially for new traders, my experience with all of this kind of stuff is, because I've used it myself, is that it does not help you make more profitable trades. And more importantly than that, perhaps more importantly than that, it doesn't help you feel more confident. It doesn't actually help you, right? I do not feel that there is any statistical edge in trading these tools. And B, I do not feel that having all of these tools on your chart to have to cross-reference and analyze, compared to how I trade, for example, and how I teach people how to trade, I do not feel that it makes you feel very confident about what you're doing, right? So I'll give you an example. I teach people how to develop a system where, hey, if Minx crosses below 0 and WADA is red and we are below the baseline, and then a couple other things, very simple things, right? You go short, right? And this is your position sizing. This is how you calculate your position sizing. And then that's it. This is where you set your stop loss. And there's two things that can happen that would make you exit the trade. You get your stop loss. This line crosses this line on your indicator, or this line crosses this line. Very simple. No subjectivity. That takes 5 seconds to understand whether you want to take a trade or not. And I think that all good indicators, all good strategies, and the best professional traders that I know trade a method similar to that. Now, I'm not saying that in the realm of quasi-professional trading, so traders who do have success to a degree, but are not really trading very large accounts, I would say that the most popular method is some level of price action, often involving lots of Elliott wave analysis, often involving a lot of Fibonacci. And that's why I think that the YouTube scene, the Twitch scene, the Twitter scene, the Reddit scene, the Telegram scene, it's all these quasi-professional traders, right? Traders who have never really had $1 million to trade with, or $250,000. You know, they're okay with their $5,000 to $30,000 account. And again, I'm not disparaging anybody. I'm just letting you know that when you get into the big leagues, things change. Expectations change, and you can't just be flippant with your calls, and you can't just be flippant with your money. Because often it's not your money. So things change when you get up to that more professional level. And I don't know individuals who run. I've never, and I've talked to people. You know, again, I've been in the offices. I've done that's who I've worked with and mentored from. You know, people who run hedge funds, people who run prop shops, people who run professional trading desks and firms. They don't look at Elliott wave analysis. They don't look at Bollinger Bands. They don't look at Fibonacci. They don't look at trend lines. They don't look at support and resistance. They don't. The majority of these now have computer algorithms designed by quants that algorithmically and automatically trade, right? And then they outsource a small risk percentage. Some firms are different. So this could be anywhere from 5 to 30 if it's a medium risk facility, where they're going to outsource 5 to 30% of their capital to prop traders, right? That's how to professional traders, right? Now, those professional traders are going to be a mixed bag of trend following traders, or reversal traders, or algorithmic traders, or statistical traders, or price action traders, right? And I would probably argue that in that realm, price action trading is more popular, right? Because it's just, people think that, you know, that trading is some level of competence with reading cat entrails, basically, right? You have all of these different data points, like I just showed you with the Fibonacci. You have all these different data points, and you know, if you just practice hard enough, you can learn how to read them right? And then people will be like, and I'll teach you how to do it. You know, it's fucking. But I would make the argument that it is more popular. But again, all you have to do is follow the money. All you have to do is follow the money. The desks, the prop firms that are funding these professional traders, right, are only giving all of the professional traders a small percentage of the fund's money, because the majority of the fund's money is traded algorithmically, which is how I trade. So I think that's something that a lot of people discount, because I've had this conversation with people too. They're like, well, Justin, I've been inside prop firms. I know prop desk traders. I know professional traders, and they trade Fibonacci and Elliott wave and analysis. And I'm like, sure, yes, they probably do. The majority of them do that. But look at the portion of the fund's money that they are receiving. And if you just follow the money, just like chain analysis, just like money analysis, if you just follow the money, you begin to start to figure out, like, oh, okay, professional life hacks. Ferguson says, never fails. Sit down at desk, kick on CC, and then boss calls a meeting. The market does like to slap you and say you're going to learn today, Mr. Ether. I agree. What's next for Bitcoin? If you closed out with profits on this 12-hour short down, suggestions on re-entries, we'll talk about that. Dr. Angie Stones, PhD, says, any thoughts? Why is Bitcoin standing still almost for a very long time? Is nobody trading? If so, why? We've had a pretty significant buyback on LTFs. We've got what a lot of people are obviously visibly seeing as what is going to be considered a reversal candle, so a doji candle. You know, some would say, obviously, if we get a bullish engulfing or a harami candle on the very next bar, then what we're going to see is a shooting star pattern, or excuse me, a morning star pattern. And so a lot of people are seeing this as a bullish opportunity and simultaneously are trying to buy into the market. And conversely, at the same point, individuals who are late to the short or trying to get into the short are trying to sell. So right now, at this current moment in time, we have a fairly tight equilibrium of volume of buyers and sellers. So therefore, this is a very hotly contested price around the $10,000 area. Ace of Spades says, speaking of indicators, I'm struggling with whether I should be using a simple moving average or an exponential moving average when reviewing charts. Do you have a preference? Are there any specific use cases for each? So not a simple answer, honestly. There are situations. So when we're talking about, if you're talking about moving averages as far as applying them to your chart, like you see I have my baseline, then I have a preference for exponential moving averages. I have a preference for exponential moving averages and also linear regression model moving averages as well. I quite like those LSMAs. But it depends on what you want it for, right? It depends on if you want it for crossovers. It depends on if you want it for support and resistance, which I don't really recommend. It depends on if you want it as a trending indicator. But generally, I have a preference for exponential moving averages most of the time. There are times when that's not what I want for applying them to the chart. Now, when it comes to indicators, when it comes to smoothing for indicators, that is almost 50-50 because a lot of oscillators, I like simple moving averages, especially if I'm looking for a line cross. And when it comes to actual calculations, I tend to prefer exponential moving averages. So it's just one of those things where, again, so let's just rewind. So hopefully that makes more sense. So if we're talking about moving averages on your chart, I like exponential moving averages, but there are going to be situations where simple moving averages work fine, depending on what you want. When we're talking about smoothing oscillators, I tend to prefer simple moving averages. And when it comes to calculations or indicators that require you to filter primary data through some kind of filter, like for example, average true range, I do have a preference for exponential moving averages. But that's one of those things that I like to test. And that's actually what's interesting is that's one of the things that in the latest optimization video, I teach people how to test very quickly because I teach you how to program in the input source on your strategy tester, and then you can choose the source that you want for any parameter that you want, and also how to write those out. Why I don't use the volume profile anymore. So sometimes I will look at the volume profile to see interesting areas if I can see them line up with higher time frame baselines. But, you know, it's just one of those areas where, you know, for a long period of time, doing the show especially, you know, I would talk about and display indicators, and like every month I've displayed different indicators just to give people an idea of, you know, you don't have to be tied to just a few. There's lots of good indicators out there. There's lots of bad ones. There's more bad ones than good ones, but there's lots of options and opportunities for people out there with a little bit of grinding, with a little bit of patience, with a lot of testing. But the volume profile just doesn't fit into the way that I trade. It is subjective. It is hard to quantify, and it is unreliable. It's unreliable. Now, it can be used to good extent. For example, I do have a video on this actually, and it's still something that we've done from time to time, is lower time frame scalping using VPSV. And that is a pretty good strat in certain market conditions. Again, generally in ranging conditions. The difficulty often comes from identifying quickly that shift from trending to ranging. When your ranging strategies are now going to work well, and your trending strategies, you need to have good filters, otherwise they're going to give you false signals. But boss, it's painting a cup and handle. Tom, I'm going to need you to pack your desk. You're fired. Young Johnny 3 fam, good to see you, man. Cryptonomics asks, what's a recommended leading indicator you use to trade with, or the one I prefer to use? So it depends. So a couple of my indicators, so Minx, for example, and Fisher Transform can be used as leading indicators. If you're using them for reversals, I don't use them for that purpose. I use them as confirmation indicators. So in that aspect, they're going to be lagging indicators, which I like lagging indicators. But I like the Fisher Transform. I find that the Fisher Transform does give really good reversal signals as long as you test it. As long as you test it, it's going to be a little different on every asset. Again, obviously our higher time frames are going to be, or excuse me, not our higher time frames, but our more liquid coins. So it's Bitcoin, Ethereum, Litecoin. These are typically, and again, especially the dollar pairs, they're going to give cleaner signals. When you get into alt BTC pairs, you got to have a really sensitive strategy, man. You got to have a really good sensitive strategy and good filters as well. So Okay, so at 12:42, and we're still on the daily chart of BTC. Anyways. So that's about it. So my short remains open. As I said, the shorts from the 12th of August, the 12-hour setup, filled all 3 take profits on that. The daily setup, I've only filled 2 of 3 take profits. And the third target is still yet to come. So we'll go and look at that target again. We'll switch over to the Rodrigo ATR. And we'll go back to the 12th, and our third downside target was 86.90. So 86.90, 8600, around mine is at 86.90. So that's where my third TP is. Thank you, Ace of Spades. Highly appreciate that, man. I take it, my personal mission is to get people away from Elliott waves, anything that requires subjectivity. Especially as newer traders, man. People make trading very, 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 very complicated. And it can be, but it doesn't need to be. Little common sense, trend following strategies, good filters. Because the reality is this, as I talked about, the reality is this, and I feel like I'm gone on this tangent for far too long. The reality is this. Learning to trade is a steep learning curve, right? And it shouldn't be. Here's the challenges in trading. It's emotional discipline, it's position sizing, it's risk management, it's money management, and it's sticking to the plan, right? Those are the biggest challenges. Those are the biggest barriers, right? So not reacting prematurely or immaturely or emotionally, not taking revenge trades, position sizing appropriately, not being desperate, not being greedy, playing the long game, playing the odds. That is the big challenge, because everybody wants to come into trading and think that they're going to day trade and become a millionaire in a year. It's just not going to happen, right? It's absolutely not going to happen. But what you can do is you can trade well enough to have a primary source of income and live a financially independent lifestyle where you can also start to build wealth over time and invest for your family, for your future, and for your life, and feel control and have control over your financial destiny. But, that is the big barrier for people, especially because, it's often a good portion of money that's on the table for a lot of people, and it's stressful and it's difficult, and we've got monkey mind, and we make bad decisions, and we're impulsive and we're reactive, and that's the challenge. Building the strategy takes time, but that should not be the big challenge. The big challenge should be learning to control your emotions. Hey, Bullseye, good to see you, man. The feared $6,000 level did nothing on the way up. That was one of the reasons I looked for a different system for myself. Aye, man. Aye. Snoolu, Glee Jones, and Richard Herschel. Thank you guys so much for the subs over there on YouTube. Highly appreciate it. Actually, sorry, Glee Jones and Snoolu, you guys are watching from Twitch, and Richard Herschel from YouTube. So anyways, let's go through the LTFs right here. 12-hour time frame. 12-hour time frame hasn't given us the full-on exit signal, so we've hit all 3 TPs. This is a situation where you could hold your trade open. You could hold that last portion of your trade open. We've talked about this before in the group about, having the limit order set for TP3, or, and we've talked about this obviously when it comes to 3 commas, using that trailing take profit feature. Something else that we can do is, excuse me, and this is something that you have to balance. This is something that you just have to test. We can test this programmatically. You can also test this. You can also test this manually. Obviously, you can back test these things. Based on what your indicator is telling you, is it going to be better for you to for sure set that TP3, or should you instead use an exit system to allow your winner to run? And I feel that as you get more confident, and this is obviously stuff we go over in PTP, as you get more confident in your strategy and you understand it better, you're probably going to begin transitioning away from the static TP levels to the dynamic TP levels pursuant to your indicators. Now, there are markets where this works better than others. For example, alt BTC pairs lately it's better to use the static, right? It's better to use the static because they pump and they dump and there's no sustained trends except to the downside. But again, when looking at those downside trades for alts that are shortable, then it's generally been better to use that dynamic exit level. So no exit indication from the 12-hour chart yet, but also not a re-entry. Really the only thing, let's go to, the re-entry zone is right now going to be around 10,343 to 10,796 on the 12-hour time frame. On the daily time frame, again, the re-entry zone, as we talked about yesterday, 10,178 to 10,883. So that's pretty low. It's going to be a pretty significant rally back up. But again, always looking for that reversal baseline bounce, which would be a nice, again, we've talked about support and resistance again, but it would have some good, nice confluence with where our primary baseline is coming in on the daily, with this previous area of tentative support that we found again on the daily baseline. So good stuff. And we'll kind of look at some other time frames here as well. Descending down to the 4-hour time frame, we're looking at that re-entry level between 10,051. So that's only $11 above where we're currently sitting, to 10,317. Of course, looking for that reversal baseline bounce, and a very good the nice thing about reversal baseline bounces is that you don't have a wide margin of error. You don't have a wide margin of error because if price crosses and closes above the baseline, well, you know that your trade was wrong. Your trade was invalidated, and generally going to be on the path to that to taking the long trade potentially, or definitely being flat in the market. So not recommending, I don't think people should be longing this. I don't think this is the dip to long. Again, I do see there being a short-term long opportunity, but again, as an individual interested in sustained trends, because the trend has shifted to the downside by breaking the baseline and throwing up all our red flags and activating our short system, then I'm just going to be interested in re-entry opportunities for that short trade and re-entering into the dominant position. So I would be pretty cautious about trying to long this. On the 4-hour time frame, we did get that cross up into minks over on this candle, so exiting a little bit of our position. Wada crossed below on this candle, on the exact same candle that Fisher crossed up above the trigger line. So we're talking about primary entry into the shorts on this candle as signaled by our system on the 4-hour time frame, catching all of the sustained movement. And you can see the power of Fisher for its intended purpose as the exit indicator by getting us into this trade right here with minks and Wada, getting us into this trade right here on this candle, and then not getting the signal to exit until here, as opposed to those, again, as we talked about, static TP levels. So that's a personal decision that everybody has to make, and I think something that gets better as they progress. Mr. Ether says, I may have an ATR solution for the running winter. Hit us, baby. Masterful programmer of trend following strategies. You beautiful man. Hit us, brother. Let's go down to the 2-hour, actually. Let's go to the 2-hour. Let's see here. And again, really nothing from the 2-hour. Consolidating in that re-entry zone on the 2-hour between 1 ATR below the 2-hour baseline and the 2-hour baseline. And I would, I'd actually be looking, as I said, you can see the potential reversal here on the 2-hour time frame. We do have, let's actually double check. Yeah, we have minks crossing and closing above the 0 line on the previous 2-hour candle. The current 2-hour candle is going to close in 8 minutes and 45 seconds, just as we move into the 1 o'clock hour here. But again, we're not above the 2-hour baseline. Wada is telling us to be out of shorts. So again, I do see, a short-term opportunity there. We haven't really crept up there as far as on the 4-hour, the 8-hour, the 12-hour, anything like that, because I don't think it's going to be a sustained daily movement. Do I see a little bit of pop back up on the 2-hour? Yes. Is there a short-term opportunity in there? Yes. Potentially a day trade to the upside? Yes. But it's not really something that I would get overly excited about. Let's see here. Glee Jones, hey man, thank you so much again for being with us. So my answer to that, and again, my static answer to that is generally going to be, if you made a trade that was a mistake, you always immediately exit the position. It doesn't matter if you're in profit. It Doesn't matter if you're underwater. And the reasons for that are very simple. Because if you end up having a win, that is going to begin conditioning you to make trades outside of your system. And if you incur a more significant loss, then the feeling of self-loathing that comes with taking a big financial loss after making a mistake is often pretty difficult psychologically to deal with. Again, not a big deal. We have a supportive community, but it's just a bad, you know, kind of thing to start you off with. You know, the loss, any loss is come backable from. It's absolutely fine. We can work it out. And, you know, if you feel that it was a mistake, as you classified it as a noob mistake, you know, I would just write that literally down. Like you see here, this is my notepad. I recommend everybody have one on their thing. Everybody wants to use a computer for everything, and that's fine, but you need to have a physical piece of note paper, right? I take copious notes for everything that I do. And the reason why is because I need to hold myself accountable. So especially with mistakes, right? Like here's stuff that I have to do today. But you know, especially with mistakes, the best piece of advice that I can offer is if you make a significant mistake, you need to write that down on paper and you need to put it on your trading monitor, right? Or wherever, your desk or wherever you happen to trade from, right? Or it's your backpack if you're mobile, you know, or inside your laptop if you're mobile, whatever, or, you know, inside the case of your smartphone if you're trading on your smartphone. And just keep that as a reminder of what not to do, right? Of what not to do, to either, you know, study the material more, or to wait for a confirmed signal, or to, you know, whatever it is that you have identified was the problem. I'm sure that I can help you out with identifying what that problem was, or the guys in the group can help you out. Reach out to an analyst, reach out to some of the members in there, reach out to a moderator. We're all here to help, man. But yeah, if you entered into something that you shouldn't have entered, and the reason, so it's different. If you want to exit a position just because you're in drawdown, but you should have taken the signal, then you don't. You wait until your system tells you to get out. But if you enter into a position you should not have entered into, then you want to exit your position immediately, regardless of whether you're in profit or loss. EMRH, thank you so much for the follow over there on Twitch, my friend. Kendi says, what if you were long from 9,700 last night? Would you exit here with a small win? 9,700 from last night's pretty good entry, obviously, to where price is at 1.25% to the upside. You know, I think, you know, again, kind of my static answer to that question as well as, you know, you should wait for your system to tell you to do something. But, you know, the better, you know, a good alternative is take some profit, move your stop loss to break even, you know, like take 25 to 30 to 50% of profit, move your stop loss to break even and wait for a clear signal, right? That protects you. If you're starting to feel antsy, you always want to let a winner run, but this isn't a position where I'd really want to let a winner run. But I want to filter that through the fact that, as I just said, I think that there does seem to be some potential on the LTFs of a little bit of bullish appreciation, you know, over the course of the day. Do I think that's going to be very strong? Is it something that I'm diving into? No. Again, I'm more interested in re-entering into the short at a little bit of a higher price and getting a better entry. Bitcoin's Millionaire and MacW. What's going on, guys? Thank you so much, MacW. I like your style. I like that you capitalized your I and dotted your style. That's classy stuff right there, guys. Okay. Ethereum. I think we're going to have to, you know, this segment has gone on pretty long. We talked about Bitcoin extensively today. So we're just going to touch on Ethereum briefly. We're going to take a quick break. We're going to come back. We're going to answer your questions, which we've been kind of doing for the last hour. And I've got some stuff that we have to talk about. We have to talk about this Chinese Ponzi scheme that a lot of people are claiming is responsible for Bitcoin's collapse. I've done some research. I'm going to give you guys my notes and my thoughts on this. And tell you kind of what I think about what's going on. We're also going to talk about. What are we going to talk about? We're going to talk about XRP. We're going to talk about XRP, and we're going to talk about the SEC. So stuff that is important. I think people want to know. Nope, we're getting to that. You did not, Bitcoin's Millionaire. Okay, so let's over to the daily chart of Ethereum. Smoking altcoins, thank you so much, my friend. Hit the like button. Yes, guys, don't forget, if you're watching on YouTube, the like goal for today is 100 likes. If we reach 100 likes, we will be donating twice the amount the crypto comment giveaway winner for tomorrow. So you guys want to double up? Double your pleasure. You know what? I don't know which one the, I can figure it out. Hold on a second. This will be fun. Effects. We want, oh, it's number 4.
Double your pleasure. Right?
Sometimes it works, sometimes it doesn't. So hopefully it did. Yeah. Probably gonna miss them. I'm probably gonna mix them up. But I think this is the one. Hopefully this one isn't today in Bitcoin. I want to say that this one's magical internet money. Can't remember. I'm gonna have to unmute myself so I can hear. Okay. We just won't press it. I'll figure it out after the show. I got it right yesterday, but for some reason I can't remember which one of those pads does today in Bitcoin and magical internet money. Anyways, sorry, getting back to the charts. Looking at Ethereum on the daily, and let's go ahead and disable the trade qualifying line. Looking at Ethereum on the daily, again, breaking down below our previous level of support. You know, if we go back, we're really not quite there to the next level of support. Obviously, you know, people are going to be like, well, we're right on previous resistance, and this is like a great opportunity. And yes, there is a bullish breaker trade, right? There is a bullish breaker trade. I am not going to deny that. So, we've got a breaker right here. That bullish breaker coming in from 180 to 173. And as you can see, price did dip right into that area and popped back up. So yes, do I see a potential, was there that potential long trade opportunity on the table? Yes, that's how order blocks work, especially daily order blocks. They tend to be stronger. This would be a, now, if price does reverse from these levels, right, then it will really, it's going to really validate all the price action traders, all the range traders, you know, all the ICT style traders, because we've had a sweep of a range low, right? Dipping into an order block. And then if price then accelerates from here, you know, you're going to hear crypto Twitter just go absolutely crazy. But typically crypto Twitter goes crazy. I mean, Forex Twitter goes crazy in the same way. When people are validated that, as I said with the Fibonacci charts, they're going to draw a ton of Fibonacci charts on their line. And the moment that one of the millions of lines that they drew reverses price, they're like, look, bro, I told you so, man. I told you so. And then most people just see those Twitter posts and they're like, oh, wow, dude, look at this guy. He knows how to trade, man. I mean, he called it like a champ. But what they don't do is they don't go back and look at that person's timeline and they're like, well, he never explicitly said that level, right? He just like drew a whole bunch of lines and then he talked about the 618 and the golden pocket. But it bounced off the 886. And then when it bounced off the 886, as soon as it did, then they came out and they said, you guys saw that I had that 886 there on the chart the other day. Told you guys. And 9 out of 10 people will not take the time to go back and actually look and see if he even used the words 886. 9 times out of 10, he did not. But I digress. Why is that? Has that been there the whole time? Thanks, David Rice. Philip Carr says the weekend is finally here again. Thursday nights is the start of the standard 3-day weekend for our employees these past few years. 4-day graft and 3 days to relax. Surely it's got to be more widely adopted. You know, I think with you spreading it like that, man, that sounds absolutely fantastic. Here in crypto land, it's like 7 days a week, man. Awesome, man. Good to hear. Okay, let's get back into Ethereum. We'll just break this down and then we got to go to break real quick. Again, in the Ethereum short, did pretty well. That's completely done because that was a 4-hour time frame short. I don't really see an opportunity here. Obviously, we had everything firing to go short on Ethereum back on this candle, right? So one candle of drawdown and then price moved in your favor. Now, Do I see this as a reentry opportunity? No, I really don't. Everything is fine for a short, but yes, you know, looking at where price is, I would obviously always be looking to enter at a better price. We're below the qualifying line on the baseline, so let's look at that. So our reentry area right now is going to be between 193 and 207. So again, kind of conjoining with that, you know, potential day or two of bullish appreciation. Am I taking trades to the upside? No. Do I see a potential little bit of a relief rally for Ethereum and Bitcoin? Yes, potentially. But one could argue that we've already seen that, because I just know that this morning, really over the last few hours before the show started, you know, things kind of pumped up a little bit and they just kind of got sold right back down into. So not a whole lot of sustained movements, but we'll let time be the judge. 12-hour time frame, again, no exit signal yet. Got a fresh 12-hour signal on this candle as well. Got a fresh 12-hour signal on this candle, which you would have hit TP1 on this candle to the downside as well. So not bad. Not bad. Have my stop loss at break even, which has been hit. So that grabs you a nice 50% of TP1 right there. Nothing to do. And on the 4-hour time frame, we've got a little bit of a pullback to 1 ATR below the baseline and a rejection. So again, 4-hour time frame, I'm going to be looking at 186 to 192 for those reentry areas on the short as well. Beyond that, again, we can go back to the 2-hour time frame and we can see that same thing that we saw in Bitcoin, which is that consolidation right under the baseline and looking for that potential very short-term time frame. Remember, time frame times 4 is going to be, you know, a pretty good time frame for how many candles your trade should, if it's a good breakout trade, go in your favor. So looking for potentially an 8-hour trade if we do end up breaking above the above the 2-hour baseline at 186.80. Let's call it. Philip, I feel you, man. Jay, what's going on, my friend? Okay, so overall, guys, still short on the market. I do see some opportunities for price to rally a little bit here intraday, potentially even stretching into tomorrow on some low volume and low volatility. Do I really see an explosive V bottom up? No, I don't. I'm happy to be proven wrong, but my trades are to the downside. My trades are securing profit. And overall, my mind is that looking for reentry opportunities for the shorts. Now, you're generally not going to be able to catch those on the daily. They do come, but you will be able to catch them on the 4, the 8, the 6, for example. But again, make sure that you're testing that. Make sure that you're testing that. Don't just take my word for it. That, you know, hey, you know, if price comes back to the 4-hour baseline, you should take the short. It's something that you want to test with the indicators and the settings that you're using, right? So with that being said, guys, Crypto Huntsman, he says, hello from Australia. Do be to trading. Mountains of crappy information to shift through to get to the gold. Love all your videos. Thank you, man. Thank you. I highly appreciate that, my friend. Brandon left Binance. Did you get your funds back from Binance, Brandon? Let me know. I'm gonna go to break real quick, and then I wanna hear. I wanna know. All right, so we're going to go to break real quick, guys. Don't go anywhere, because when we come back, we're going to be talking about the Chinese Ponzi scheme that many are claiming is responsible for Bitcoin's recent price depreciation. We've done some research, and we're going to reveal the facts that we know to the best of our knowledge. But before we do that, and before we go to break, as a professional trader, I'm often asked what metrics I use to evaluate an exchange, and I always say the same thing. The 3 metrics that I use to evaluate an exchange are going to be security, ease of use, and customer service. The primary reason this kind of caused a stir in my community that I moved from BitMEX as my primary platform to trade on Bitcoin futures, and why I moved to ByBit is because of their customer service. And honestly, I like a lot of the things that they do. I like that they automatically calculate your USD valuation. I like that they actually hold your BTC and say they hold your BTC, whereas BitMEX, which say they do not hold your BTC. You trade your BTC for XBT tokens, which, I don't care what anybody says, is not the Kraken ticker symbol. It is, if you read the terms and conditions, a casino chip token created by BitMEX. So, for that and other reasons, the scam wicks on BitMEX, the fuck you candles, the system overload. That's why I trade on ByBit. Never had a problem, never had an issue, never had a system overload issue. And every single issue that I've ever had, major or minor, and that I've heard from other people as well, their customer service is taken care of like that. Because that's just what they do. Good platform. If you guys would like to try ByBit out for yourself, you guys can go to ByBit.krakencryptocurrency.com. Link is in the description down below. If you use that link, it will give you up to $60 in a margin bonus to test their platform out. You can't withdraw that, but you can use that to trade, and you can withdraw the profit as well, depending upon what you do with your account. Again, up to $60. You can use the link down in the description below, bybit.krakencryptocurrency.com. We'll be right back, guys. Don't go anywhere. See you in just a minute. Thank you guys so much for holding through the break. We've got a fantastic second part of the show for you guys today. If you guys missed the first hour, we talked at length about trading strategy. We talked about psychological control and emotional discipline. We talked about Bitcoin's price for like an hour. We talked about Ethereum's price. We talked about a few price predictions and where I am heading in the market. So make sure you guys check that out. If you're joining us for the second part of the show, we've got a fantastic second half. Let me start off with, let's see here. Crypto Beginner says, I moved all my funds from there a month ago. It went easy. Yeah. Binance, I've never had problems pulling funds off of there. But again, as I talked about, I have heard from 2 people now, American users, that their VPN slipped when they were trying to withdraw funds from Binance. And due to that, Binance immediately locked withdrawals, still allows them to trade, but is not allowing them to withdraw until they verify their identity. And excuse me, what I really think Binance is doing with this is I think that Binance is attempting to kind of filter out American traders early. Obviously, in September, it's coming up very quickly. In September, they are going to officially be banning Americans from the Binance.com platform. Obviously, Americans are already geo-blocked from the DEX, even though CZ himself has said use a VPN. And I think it's going to be harder to kick people off of the DEX. But as far as Binance.com, I think that they're going to be doing anything and everything in their power to identify and get Americans off their platform. Are they going to be amazingly successful with it? Probably, yeah. They're probably actually going to be pretty successful. Are they going to get the really diligent people who set their stuff up right in the first place? So, for example, every piece of information you've ever submitted to Binance, they have in a spreadsheet somewhere. They're able to do statistical analysis, and they're not dummies. So, for example, if you signed up with a Gmail and your Gmail uses there's an American type name in there, right? For example, they've probably got that flagged in their database. If you signed up using an American IP address, that's in their database. They know every time you visited their website and every IP address you've ever pinged their website with. That's all in a database. They're going to be looking for opportunities to lock you out, regardless if you've done identity verification. So just be cautious. You know, I think a lot of people who want to continue trading on Binance, I think they're going to be well served by setting up a new account fresh and setting up an account right. This is why, you know, in the group, in our premium webinar series, I talk about how to set up an exchange account. That's in the BitMEX tutorial. And I talk about how when you set up an account for an exchange, you need to create a new email address. You need to, you know, make sure that, you know, if you want to, because for me, it's about digital privacy, not just geo-blocking. You want to make sure that you do everything when everything on exchanges from behind a VPN, and that you don't falter in your vigilance. That's why I have a dedicated trading computer. I only trade on that computer. I don't do anything else on that computer. And, you know, again, when it comes to accounts and exchange accounts, I always never use my primary email account. I always use a different email for every single exchange. I use a different phone number for two-factor authentication for every single exchange. So that way, if you like, you know, the call is out there, and it's not just me. Let's not put it that way. It's just good practice, right? If you want to ensure your safety and security, this is cryptocurrency we're talking about, right? So this is the Wild West. You need to make sure that you just take some common sense, proper precautions. But most people don't. Most people set up their exchange account like kind of late at night, and they're like, oh, you know, I heard about that, you know, Binance from like, so, you know, from Crypto Zombie. Shout out to Crypto Zombie on YouTube. I'm gonna go check that out. And then they set up their exchange account, and then like later on, a few months later, they hear somebody like me saying, yeah, man, you should like set it up right. And they're like, oh, that's a lot of work, right? You know, so if you just get in the habit and practice of setting things up right the first time, then you never have to worry about them. Again, it's part of, you know, having a good plan, having a well-structured life. You know, we do things right the first time, and then we don't have to go back and fix our mistakes in the past. Kendi, do I have a video on how to set up a ByBit account? I don't, but actually I was just talking with the team last night, and that's actually, I'm going to go ahead and make a video on how to do that. That's going to be on the public YouTube channel. So I am going to make that tutorial video. Yep. But there is a link to Windscribe down there in the description. It's Windscribe.crackingcryptocurrency.com. It's the VPN I use. I think they're fantastic. They accept cryptocurrency. They don't log data. They're fast. They're very convenient. They're crypto friendly. And they've got a great Discord. So you guys can join their Discord for any service that you want. I've never had a single issue with Windscribe VPN. And again, it is the one that I use. Link is in the description down below. If you use that link, you can actually get free bandwidth per month. Let's see here. All right. So with that being said, we've got some stuff that we need to talk about, guys. So let's head on over. Let's head on over to. You guys let me know if I did it right. Today in Bitcoin. Well, we're going to find out. Anyways. All right, so Chinese Ponzi scam floods exchanges and hits Bitcoin's price. So Wednesday saw Binance go down for 6 to 8 hours for scheduled maintenance to implement geo-blocking for anyone shorting BNB. Wait, sorry. No, I mean for platform upgrades. And this left users upset because the outage on Binance did coincide with the massive market sell-off. Now, the biggest issue, however, on Binanceans' minds today seems to be reports that Chinese Ponzi scheme Plus Token is liquidating its supply of, wait for it, 3, not million, billion, that's Billy with a B, dollars worth of BTC on Binance and other exchanges, and have been actively since July. Other exchanges include Wabi and Bittrex. Now, if you haven't heard of Plus Token, don't worry. Neither have most involved in cryptocurrency. Little is known about the Plus Token scam outside of China or South Korea, but it appears, it's not just appears, it is a massive Ponzi scheme that operated for quite a long time, since mid-2018, and that has bilked investors of billions of dollars in cryptocurrency. Again, as I said, it started in mid-2018. Plus Token was your classic high-interest promising Ponzi scheme, very similar to BitConnect. This was BitConnect. One would invest their Bitcoins into the Plus Token platform and receive passive income in the form of interest. But obviously, we know how Ponzi schemes work. All you were doing is getting paid out with the funds that new investors to the platform were paying in. That's how Ponzi schemes work. Now, it had 4 tiers of membership pursuant to how much you invested. Obviously, the more you invested, the higher interest rate you received. Now, the core team behind, let's just scroll back up here to the top. The core team here, as you can see, they did get doxxed. The core team behind Plus Token was apprehended by Chinese authorities 2 months ago. However, chain analysis suggests that someone still has access to their private keys, to their Bitcoin addresses, and unconfirmed reports from Chinese traders suggests that someone in control of the funds is consistently dumping 100 Bitcoin batches on Binance, in addition to 50 to 100 Bitcoin batches on Bittrex and Wabi. Now, again, I looked into this a little bit more, and it does seem like from the sentiment and from the posts of people that I do respect on Twitter, it seems like this is mostly confirmed that yes, chain analysis does show that from these consistent wallet addresses that are known to be associated with the Plus Token platform, that those funds are moving in 100 Bitcoin batches to Binance. Now, most of the Bitcoin addresses that were found by authorities and that also are just public record, because Dovey Wan over on Twitter was in the Plus Token Telegram channel, or in the Plus Token chats, and listed all of the addresses, the Bitcoin and deposit addresses that they had listed on their website to deposit money to their platform. So all of this is trackable through the blockchain. Now, most of those addresses were pay-to-script hash, right? Pay-to-script hash is a certain type of wallet address for Bitcoin that is not native SegWit, but is SegWit enabled, right? That is SegWit compatible, right? So generally, P2SH, pay-to-script hash, are going to start with a 3. These are known as SegWit compatible wallets, although not necessarily, but they're pay-to-script hash wallets. Now, as opposed to a native SegWit wallet, which is typically going to start with a BC1 address, and that's a Betch32 protocol address. It's a little different. That's native SegWit support. You know, Betch32 is obviously going to be the new standard moving forward, but the problem is some addresses cannot pay to a Betch32 address. Now, a Betch32 address can pay to any address, and a pay-to-script hash address can pay to any address, and a legacy address, which typically starts with a 1, is going to be able to pay to any address. But some exchanges and wallets have not integrated support for Betch32 yet, meaning you will not be able to potentially, depending on your exchange, send Bitcoin to a Betch32 wallet address. But if you have funds in a Betch32 address, you can send it to anywhere you want. So anyways, so most of the addresses that are associated with the Plus Token scam are pay-to-script hashes, which is also commonly used for multisig. Now, so due to this, the wallets cannot, but because, so because the addresses are multisig, the authorities, which have apprehended not only the addresses and the suspects, but also their private keys, they cannot open or access the funds with the private keys. And this would strengthen the case that someone or multiple someones are still free and have enough private keys to control the addresses, to control the wallets, to pay from those addresses. Now, there is rampant speculation right now that the 200,000 in ill-gained Bitcoin flooding the market is from the Plus Token scam. And that because of this liquidation, because of the big arrest, and again, the arrests coincide with the first transfers. So as soon as these guys got arrested, that coincides with the first transfers to Wabi, Bittrex, and Binance. On Wabi and Bittrex of these 500 to 100 Bitcoin batches at a time, and on Binance of these 100 Bitcoin batches at a time. And again, just coming from the order book traders that I talk with, we have seen on Binance, on the Binance USDT pair, the BTC USDT pair, these 500 Bitcoin sell walls that people just thought were people attempting to suppress price. But what it really was potentially what it really was these individuals attempting to liquidate these larger positions of Bitcoin. Again, there is a significant amount of Bitcoin still left to be distributed by these individuals who are trying to dump their token at these premium prices. And the speculation is that it is this just continual sell-off, again, stretching back to June, that is one of the big impetuses for this. Now, again, it's not just like, as a trader, it's not just that this is the only thing that's causing the dump. Obviously, there's more sellers than buyers. But when you have a massive supply coming to the market in the form of these individuals who are willing to dump 100 Bitcoin at a time consistently, day in and day out, that does have a very, very negative effect on price, especially when some would argue the Bitcoin's price is quite high at the moment, right, relative to where it was in previous months. And so there's not a whole lot of people who view price as cheap at the moment. And so it makes it more difficult to have that to maintain that asymmetric balance between buyers and sellers in favor of the buyers, one would argue. So this is, there's a lot of speculation about this. I'd love to hear your guys' thoughts and opinions on this. Let me know down in the comments section down below, or leave some information in the live chat. Again, I'll try to respond as best as I can. But we do know for a fact that this was a Ponzi scheme. We do know for a fact that they have been apprehended, and we do know for a fact that there are funds coming from multi-sig wallets that are associated with this scam that are consistently depositing funds onto Binance, BitFinex, and Wabi. Why would they be depositing such massive amounts of Bitcoin onto these exchanges? It's only to sell them. Again, crypto inflow and outflow. When you see more cryptocurrency flowing into the exchanges, that money is not going onto the exchanges to sell, or excuse me, that money is not going onto the exchanges to buy more. People transfer funds from cold storage to exchanges to sell and then withdraw cash or withdraw Tether or move their funds around or move into a different asset, which often spells ill for the primary base cryptocurrency that we're talking about. In this case, that's Bitcoin. Obviously, there's also Ethereum, a lot of Ethereum, and a lot of EOS as well that's been collected by these people. We have less information on the Ethereum addresses and less information on the EOS addresses. There are some unique things that more advanced power users of the Ethereum chain can do as far as obfuscation, as far as multi-sig. But again, that's less commonly known. We do know, and again, I don't know any of that stuff for a fact, so that's just rampant speculation. But we do know for a fact through chain analysis of the Bitcoin blockchain that this is happening. Michael Fariello asks, why are all these platforms banning American users? BitFinex, Binance, etc. Where can we trade besides Coinbase Pro? I was forced to sell all of my Neo because I had no time to set up an offline wallet. So again, another thing that I want to touch with Binance is that Binance, if you're an American user, they're not going to steal your funds, right? Binance has already publicly announced that if you are an American user, they're never going to take your funds. You won't be able to trade, and you won't be able to make deposits to any cryptocurrency address that you have, but you'll still be able to withdraw your funds whenever you want. So that's that. People have time, people have patience, even if they don't make the September deadline. As far as exchanges that you can trade on as an American, you have Coinbase Pro, you have Wabi Pro, and you have Kraken. And BitFinex and Poloniex is moving out of the States, but you can still trade there currently. Gemini. But as far as access to a lot of these altcoins, that's largely drying up. And honestly, I don't view that as a bad thing. I don't view that as a bad thing. I think the majority of these projects are terrible. I think that the money that is just flowing through them is not profiting a lot of traders. I think that it's profiting a lot of people who are profiting, or founders of the token, who that token's not going to do anything. It's not going to go anywhere. I don't view it as a bad thing to have less options, because that means that the options that we do have is going to be more liquid. There's going to be more traders. There's going to be more volume. They're going to be better exchanges. They're going to be higher quality exchanges. And I think that overall individuals are going to have an easier time of trading. Because I know one of the big problems that people have is they start off on something like Binance having, you know, access to these hundreds and hundreds of altcoins, and it's impossible to choose from. And then they're following these random, you know, alt BTC signal groups on Telegram that, you know, are not giving good signals, you know, 9 out of 10 times. And, you know, they're just chasing this price around all the time. And that's something that's very complicated to do. You know, individuals are able to do that with bots pretty well, and individuals are able to do that with good strategies. But again, even individuals with the best strategies tend to, especially for day trading, tend to focus on certain charts, tend to focus on certain pairs, or they have, like we have, a system that runs in the background that identifies, hey, these charts are good to trade right now, and that's it. Don't touch anything else. And then we get the next day comes and more information comes. These charts are good to trade right now. Don't touch anything else. So I don't think that access to more is actually good for people, because again, that, you know, the argument would be different if all these options were good investments. I don't think that they are. I think the majority of these altcoins are not good investments. So, you know, I think that a lot of them are going to die off, and I think that's actually a good thing for the space, because what's left behind will be quality, will be value, and we can make the argument about investing. Again, I've talked a lot about altcoin investing. You know, it's not that I'm completely harsh against it. It's just there's so much blood in the water right now, and there's so many bad actors in the space trying to manipulate you into buying their project or this project, or pump up this ICO token or this ICO token, that it's very hard for somebody who wants to be a passive investor, like I enjoy passive income from my investments, to make a good determination. That's why I always recommend invest in quality, invest in value, invest in what you believe in, invest in what you think is going to change the world in a realistic fashion and that has a track record, and you'll be fine, right? Diversify, secure yourself, money management. But I will say that I do like NEO. I do like NEO. And obviously, we're going to have access to decentralized exchanges. DEXs are a reality. I think that there's some big problems with trading on DEXs right now. We have a video about the dangers of trading on decentralized exchanges right now because of liquidity. But I think that we're going to see those over the next, 5, 10, 15, 20, 50 years, whatever, become massive hubs. I think that the future is decentralized exchanges. But in the interim, we're going to have more established platforms, more established systems in the interim. And again, it's not the best thing, but it's not a bad thing. It is what it is. All right, next story. So Coil. Coil is a San Francisco-based startup. It was created by former Ripple Chief Technological Officer Stefan Thomas. So they have received a 1 billion XRP pledge from Xspring. For those of you who don't know, Xspring is Ripple's startup to invest and help develop the Internet of Value. They invest in blockchain startups. They partner with companies to help them grow. Coil's project is to disrupt the business model right now for content creators like myself, advertisement and subscription-based support, which is the current revenue model for most content creators, whether they be content creators like myself, musicians, artists, gamers, DJs, as popularized by YouTube, Twitch, Patreon. So as I said, the advertisement and subscription-based, profit method, as I said, popularized by YouTube, Twitch, Patreon, and other platforms. Now, Coil's solution or their ideal solution is one in which real-time cryptocurrency micropayments are going to be a real alternative to advertising and subscription-based revenue. Now, the underlying technology behind what Coil is doing, behind their monetization, is the Interledger Protocol, or ILP. Now, the ILP does support multiple cryptocurrencies natively. In fact, they allow users to send and receive many types of currencies. But it's pretty clear that with this grant worth 1 billion XRP that is going to fund Coil, it's going to move Coil, in my opinion, in an XRP-centric direction, as well as possibly rain a lot of promotional XRP down on their ecosystem for quite some time to come. Now, Coil says that they're going to be using the 1 billion XRP to build an ecosystem of creators, developers, companies, and nonprofits that are using XRP through the web monetization open standard. A portion of the commitment will also be used to help build awareness of Coil among creators, consumers, and strategic partners, that is, advertisement. Now, earlier this year, the company, Xspring, also announced its partnership and investment in Imager, which is the community-powered entertainment platform, and Cinnamon, which is a video streaming service, competitor to Netflix, Twitch, things of that nature. In addition, Xspring did participate in Coil's $4 million seed round. So So here's my thoughts on this. This is pretty neat. I'm actually quite in favor of this idea of micropayments disrupting the current monetization scheme of, again, YouTube and Twitch. I do think that the current scheme of running ads is outdated. Of course, if we run ads on this platform, it helps pay for a lot of the stuff that we need for the show. But I think there's lots of good projects like Brave trying to solve that problem in unique ways. And, you know, it's an interesting concept. I think it's a valuable concept. And I do think that micropayments disrupting subscription-based services and running ads is kind of the future of supporting your content creators online. But as I've also said, I do not feel with XRP's involvement, or I do think that with XRP's involvement now in Coil in such a significant way, they obviously invested in their startup round. They're giving them a billion XRP. I think this is going to skew their entire user base toward that cryptocurrency, which is XRP, which I think is a bad idea. I think this is a fantastic use case for the Lightning Network, which unlike, XRP, which again, XRP claims to have what the Lightning Network has, but does not. So the Lightning Network, unlike XRP, has greater privacy, it has greater security, and that little thing called, it's on the tip of my tongue. It's, decentralization, an actual use case. So good marketing coming out of XRP, good branching out, good company partnerships, but it's still a shitcoin. So with that in mind, let me know what you guys think about that. And we're going to move into our last story of the day. And this is going to be, here's Xspring's website right here. And this is going to be Kik. So Kik launching a scathing rebuttal at the SEC. So the messaging app, as we know, Kik had suit filed against them by the SEC for running a fraudulent ICO. So Kik has launched a rebuttal. The messaging app has filed a countersuit against the SEC, claiming the agency has deliberately twisted facts to make it seem like Kik had not complied with necessary regulations. The SEC launched an investigation into Kik and came to the conclusion that their token, KIN, was a security and did not comply with security regulations. They further alleged company management knew they would not be able to sustain financially after posting $1.5 million in revenues and $32.3 million in expenses from 2016 to 2017, as reported by the Financial Times on August 7th, 2019. So BitFinex also hit out at New York State regulators, as we talked about last week, for supposedly twisting facts and cherry-picking data points as well. If both of these assertions prove true, it's clear evidence that American regulators are trying to malign crypto businesses in the public eye. We have to realize that after tearing down LibreCoin, these regulators are going to face a new potential challenge from retail behemoth Walmart, who is setting up their new cryptocurrency now. The cryptocurrency space is just starting to boom, and the issue on regulators' minds is finding a way to adequately impose their authority over these companies. So one would hope that that is not the case and that the regulators would act fairly as they would against any other business or industry. But we know that is not the case. We know that's not the case. We know that regulators are panicked. We know that governments are panicked. We know that governments are trying to come up with solutions to kind of stem the flow and tide because they see what's coming. And, we just have to, kind of be aware of this. Now, I would speculate that Kik, and again, I don't want to seem like I'm Kik-centric or approving of Kik or anything. I have literally zero opinion on their ICO or their project or their token. Again, so take all this with a grain of salt. But I would say that it is much more likely that, if anything, Kik has been maligned, right? Whether or not their project is good or not, or whether that they're not going to be able to maintain as a business, or whether they misled investors, I'm not commenting on. But I would say, insofar as this ruling goes, I would say that it is more likely that this and this entire SEC debate or a situation with Kik is the SEC throwing their weight around and going after what they consider to be low-hanging fruit. And with BitFinex, that they actually do legitimately have a case, because I do not see any possible way that BitFinex is not guilty of fraud. I do not see that. I do not see how BitFinex and the Tether Treasury are both in collusion to either A, manipulate the price of Bitcoin, B, manipulate Tether investors, or C, manipulate prices on the BitFinex exchange. I do not see any situation, and even if all three of those things are not true, we have, in my opinion, indisputable evidence that BitFinex misled not only all the users of their platform, but also misled every single Tether investor on the planet, and also, by de facto, anybody who holds Tether as well, misled them about the backing of the Tether, right? I know that, and it seems funny to me, because a lot of Bitcoiners, a lot of people who are either Bitcoin maximalists or less Bitcoin maximalists, but as I like to call myself, altcoin minimalists, you know, it's not that... I find that from Bitcoiners or people who are mostly concerned with Bitcoin, they're like, you know, there's a spectrum, right? So you've got Bitcoin maximalists over here where everything is a shitcoin. And then you've got altcoin minimalists like myself over here who are like, well, Bitcoin's obviously the big daddy and that's, you know, the best. And we want to support Bitcoin and that's the life-changing thing. But we could see like use cases and investment and some other things as well. And then you've got a spectrum, right? You've got a spectrum between there. And then, you know, over on the other side of the coin, you've got altcoin maximalists over to one side that say Bitcoin is old, it's replaced, we're going to tear it down. Yeah, man, fucking, you know, fucking blah, blah, blah to the moon, you know, fucking stellar lumens, baby, we're going long. And, you know, and then kind of like, you know, kind of meet in the middle. So it's a spectrum, right? I find that individuals to the left or the Bitcoin maximalist side of the spectrum, however they fall, whether from altcoin minimalist to Bitcoin maximalist, I find that they don't really care about Tether, right? They're like, yeah, I mean, fuck Tether, dude. It could go, it could stay. Like, who cares? Bitcoin's strong enough. We just trade Bitcoin to the dollar. It's all good. We don't need it. It's fine, whatever. But for some reason, I find that as you like branch over to the right and you get into the altcoins, for some reason, all of those people are absolutely fanatical in defense of Tether. Like, it's a necessity. It's done so much for the market. It's so fantastic. BitFinex are great. They gave us hot chocolate at the last Intercontinental meeting. I don't know. I don't know what that means. I don't even know if it means anything. But I do know that's something that I've noticed. And it concerns me. But, yeah, I don't see how BitFinex is not guilty of clear-cut fraud. They misled individuals on the backing of the Tether. They misappropriated funds and had funds lost because the funds were seized by the government, but the funds were seized in the government in the first place because they trusted them with a third-party company called Crypto Capital Corporation, which was also the fund manager, essentially. I don't want to say fund manager, that's the wrong word, but they were holding funds for Quadriga CX, the Canadian exchange, where people were holding lots of cryptocurrency on that went bankrupt. And lots of my friends in Canada lost money because they had funds on Quadriga CX. You know, BitFinex, however you want to slice it, however long they last, even if they get in trouble, right? They're fraudulent. They did that. There's no denying that. Not speculation. I mean, regardless of what they admit to, I mean, the evidence is there. They had money. They lost money. They borrowed money from the Treasury reserves. Didn't tell anybody. Raised a massive ICO for some fucking shit project named Leo. Supposedly paid the funds back to the Tether Treasury with excess profit. Dumped this useless token on investors. And now what? So I don't know if they stole the money. I don't know if they're laundering the money. I don't know if they actually had the money stolen from them. Doesn't matter. They fucked up. I've never traded on BitFinex and I never will. And I think if you are on there, you're most likely a fool. And if you're not a fool, you're being misled. And if you're not being misled, you're being too trusting. And if you're not being too trusting, taking too much risk. Either way. But again, that's a controversial subject. You guys are going to be making your own decisions, and I wish you the best of luck with whatever you do. And with that being said, thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update. Of course, I've been Justin Wise, your host for today's show. I am the lead analyst and senior mentor at KrakenCryptocurrency.com. If you guys would like to join us, if you guys would like to learn how we trade, if you guys would like to learn our strategies, if you guys would like to have access to our trade setups and signals, mentoring from our analysts, access to our private Discord community, access to all of our educational content, including the Pathways to Profit Strategy Building course designed to teach you how to build your own technical strategy from the ground up so that you can be a consistently profitable and self-reliant trader without relying on anybody, then you can check out the link in the description, premium.krakencryptocurrency.com. Guys, Make sure to leave a thumbs up and a comment on the video after you're done watching. It'll be ready to go in just a second. And make sure to head over to breakingbitcoin.money so you can catch the podcast on your favorite podcast catcher of choice. And we'd appreciate a 5-star review on iTunes. Helps us out over there too, guys. So we're here every day for you guys. We appreciate the support. Make sure to show it back. Make sure you like what we're doing here. Make sure if you support what we're doing here, that you show that by clicking a couple buttons and just letting us know. It really helps us keep us motivated and know that we're doing a good thing here in the space, as we know that we're doing, guys. So we'll be here tomorrow, same crypto time, same crypto network. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, leave them in the comment section down below. And I will try to respond to you within the next 48 hours. You guys have been fantastic. Trade safely, and I will see you guys all tomorrow.